Mobile money is a service that was initially designed to promote financial inclusion, but now it has evolved to a service that can be tapped into to broaden the tax base. A few weeks ago, it was a tax proposal for the new financial year, and majority of the public had their fingers crossed that the president will not approve it.
From the budget reading, we learned that mobile money excise duty is going to be increased from 10% to 15%. This is definitely going to increase the cost of mobile money.
However, that wasn't to be.
These are innovations. It's an innovation that has been working for some time and has always been beneficial to the nation. Now, something which has been working, favoring people, you are blowing it aside. You are blowing aside. At the end of the day, we shall remain with nothing, and we shall be as if pushing us back to 90s or to 80s, which we do not want, and we are not part of, and we are not interested in.
Just recently, the financial sector deepening Uganda released a report showing 25% improvement of financial inclusion in a decade. Mobile money platform was singled out as the main catalyst of the transformation.
Looking at the year when we last had the FinCorp survey, that's 2013, form of financial inclusion grew from 52 to 58%. And that one was also followed by a reduction in the informal financial inclusion from 28 to about 20%. And that has been facilitated by, among other things, the movement of people or the adoption of mobile payment systems, and specifically mobile money. We see some drop in the use of banking services, as some people are taken from banks to mobile money, and some other people are picked from the formally informal to mobile money. Mobile money is looked at as one of the formal forms of financial inclusion.
The expansion in coverage of mobile money and innovations has been such an expose in the development circles, particularly due to its ability to bring the poor people in their various categories to participate in the financial market. With about 5.8% charged per transaction, analysts say the financial inclusion struggle in Uganda is real.
The people who will be affected the most are those who do large transactions, because then you're able to pay quite a bit.
Since its introduction in Uganda in 2009, mobile money has helped expand formal financial services to populations that were previously excluded.
1 out of every 2 adults in Uganda are actually using mobile money, compared to 1 out of 10 of Ugandans who actually have bank accounts or using bank accounts in a commercial bank. So we can clearly see that there's a really big gap between the people that are using mobile money and those that are using banking. And we know that banking has also adopted mobile banking. So we are yet to fully understand, and of course with time we should be able to see whether this figure shall reduce or whether this figure shall stay the same.
In 2013, 56% of Uganda's adult population was using mobile money services, and by 2016, the value of mobile money transactions had reached a whopping 3.6 trillion shillings, a figure that is now projected to have surpassed 4 trillion shillings in 2017. Dennis Igor for UBC News in Kampala.